Hey folks, and welcome back to the channel. If this is your first time with us, my name is Alex. I'm that Hawaiian guy helping you folks out there in YouTube land make a little bit of money in the stock market. Typically on this channel, we like to talk about all things regarding finance, things that happened in the recent past, things that are going on right now, and where do we see the stock market going in the near future. In today's video, I'm really going to take a deep dive into the Chinese sector. I've gotten so many questions and comments in my social media regarding, hey dude, where do you see the Chinese market going in the next few weeks, few months, even a few years? So today what we're going to do is talk about those companies like Alibaba, Baidu, JD, NIO, Didi Ride Sharing Company. Where do we see these companies going, and is China a sector that you want to invest your money? Also, at the end of this video, after we do discuss that, I want to give you two alternatives to actually maybe kind of hedge your bets a little bit when investing in the Chinese market. Without any further ado, let's get right into it. All right, folks, let's get right into the video for today. So what we're going to talk about is the Chinese stock market. Where do we see these guys headed in the near future, and what's going on? Why are these companies tumbling 50, 60, 70, 80, 90, even almost 95% in the stock market? What's going on to create such turmoil with these really phenomenal companies that are coming out of China? If you haven't subscribed yet, just hit that subscribe button in the bottom corner. It really does help creators like myself grow this YouTube channel and get the information out there to individuals who might need it. Now, if you're an individual who've been following the stock market for, say, maybe the last year, maybe the last couple years, you have seen a trend with a lot of the Chinese tech companies in particular. And a person like myself who've lived in Asia for more than 20 years, I actually lived in Japan, but for some periods of time I was actually in China as well. I haven't been extremely surprised with a lot of the things that goes on, because you have some amazing, phenomenal companies coming out of China, and if they were able to grow organically, they have some really solid, phenomenal products that would just do amazingly. But because of that invisible hand that invisible political hand that's actually creating a bit of havoc in the country right now, you're seeing these amazing tech companies just getting clobbered. Now, we don't know where these crackdowns might end, where the Chinese government are saying, hey, we're going to put stipulations on this company, we're going to put stipulations on this company. We don't know where this might end. You have companies out there like Tencent Holding that is currently trading about $60 and some change. After a lot of these government regulations are pulled off of these guys, they might start trading $200-300 a share. We don't really know. So perhaps if you do have investments in these tech sectors in China, maybe you don't want to pull everything out. So again, I do want to give you a couple alternatives. If you do like this particular sector of the world and you do have confidence that they would do well, I'm going to give you two alternatives that might maybe put your mind at ease. However, there are two particular companies that really threw me for a loop that I didn't really see that the government may be cracking down on this particular sector. Me being an educator myself, I don't really see governments actually coming in and saying, hey, you're doing a phenomenal job, you're helping out the kids, you're helping out people around the world. We're going to put a lot of restrictions on your company because we want you to slow down a little bit, and we don't want any foreign investors helping you. This really kind of threw me for a loop, and one of the companies I'm talking about is TAL Education, T-A-L Education. And you might not be familiar with this company, but basically what they do, they provide educational resources to individuals who might live in a rural area. So if you're a child who don't have access to the local school system, they provide a program that you can actually study at home. So maybe they'll send you the booklets and the testlets and things like that. They also help students prepare for like college entrance exams, things like maybe the SAT or ACT. The name is different over there, but it's basically the same thing. They also help students who are looking to maybe go international. Maybe you want to do an international education, so they'll help you with English abilities to learn like basic English skills. So these are really, really great companies that does great for not only children in China, but actually individuals for all around the world, which I was really, really surprised that there was restrictions that came down on TAL Education. And these guys were sitting about $79 and some change back in 2021 of March. And now they're trading about $6. $79 to $6. And keep in mind, this is an education company that has done phenomenal work for individuals all around the world, particularly in China. And the government's like, yeah, we don't want you to do that anymore. That was the first one that kind of threw me for a loop. The second one is a company called New Oriental Education and Technology, kind of the same premise as TAL Education. This is a phenomenal company that, as far as education is concerned, it's really great, and they've only done really great things. But for the government to step in and say, hey, we don't want any foreign investors, you're doing this wrong, you're doing this wrong, we don't want you to do any of this stuff anymore. And these guys saw, back in March, they were trading about $154, and currently they're trading about $18 and some change. Again, where is this coming from? Where are they headed down the future? Where are they headed in the future? We don't really know. And then you look at the huge tech companies that are coming out of China, and some of these companies I actually did own. I have actually sold all of them, full disclosure. But the first company I want to talk about is Tencent Holding. These guys, before, I think 2017, late 2017, Trump was kind of hammering these guys more than the Chinese government, but they dropped from about $99 and some change, and currently this morning they were sitting about $62. Tencent Holding was a company that I had, and this is a phenomenal company, and I only hope the best for these guys. And if that invisible hand, that invisible political hand, can just take the hand off of the company, the organic growth from this company will probably be amazing. And the second company I want to talk about is the Amazon of China, and I'm talking about Alibaba. This is an amazing company, and if you're an individual who likes to get products that aren't completely brand name, you get, instead of getting Gucci, you might get Chuchi or something. But it's like they got some real products and some kind of knockoff products, but you just see some of the weirdest things you've ever seen in the world in Alibaba, and the prices are just as good as Amazon. And the CEO, Jack Ma, this guy was living on cloud nine for a number of years until the Chinese government came and pulled that carpet from under his feet, and he disappeared for, I'm going to say, about 2 or 3 months. And when he came back, he was much more of a docile type of man, didn't make television appearances that much. His mouth had really been silenced from where he was, say, 6 months ago. And you've seen the price in Alibaba drop from about $309 down to about $198 and some change. Now keep in mind, this is a company that has access to over 1.6 billion people. That's almost, a quarter of the people on this planet. So he should be far more, this company should be far more ahead than where they are if they were able to grow organically. How about Baidu? Baidu is an amazing company. This is actually one that I did have in my portfolio up until about 2019. Baidu was trading about $339, and now they're sitting about $166 and some change. All right, seeing about a 50% drop there. The next one, Neo EV. This is one that I had a lot of faith in because, if you guys know, I do love EV technology, autonomous vehicles. I definitely see this as where we're headed in the future. And if these guys were able to grow organically, I think Neo would just be a rock star. But these guys didn't get hit as bad. They were sitting about $62 a few months back, and currently they're sitting at about $42 and a little bit of change. And the next one, where I have said over and over in this channel, I do not like to invest in IPOs. Too much volatility in the first 6 months or so. I always try to wait. But DiDi came out, I think they IPO'd at like $16. And the fact that they have a 90% hold on the current, where they did have a 90% hold on the current Chinese market, which is about 1.4 to 1.5 billion people, I thought, hey, you might as well get a grand or maybe $1,500 in here, just for shits and giggles, see where they go. And DiDi got me as well. I actually bought in, I want to say, I didn't get in at the highest point, I want to say about maybe $16.90. But actually they got up to about $18, and currently, prior to making this video this morning, they were trading about $9.65. So you're starting to see a trend in these companies in China where they're getting hit, dropping 20%, 40%, 50%, 60%, 70%, 80%, and on and on and on and on. So am I telling you not to invest in China? Of course not. I don't have a crystal ball, and I don't know where the Chinese stock market is headed. What I'm doing is giving you information that is readily available on the internet, a little food for thought if you are invested in this sector. All right, so what could you do to kind of kind of hedge your bets and be a little bit safer, invest in this particular sector of the world. The only thing I can think of is maybe investing in an ETF. Now, again, I am by no means telling you to go out and invest in these companies, but what I am telling you is that if you do like investing in the Chinese market, you might want to kind of spread the wealth around a little bit versus investing only in Alibaba, investing only in NIO, investing only in Tencent. We're going to talk about a few ETF here that actually covers all of those. And the first one I want to tell you about is a company called Wisdom Tree China EX State-Owned Enterprise Fund. Ticker is CXSE. Prior to making this video this morning, they were trading about $57.87. Now, this particular ETF holdings, you have companies like Tencent Holding, Alibaba, Meituan, JD.com, Ping, Baidu, NIO, NetEase, Ping, and Insurance. These are all of the great companies that China has to offer right now. And what you can do is kind of spread the wealth throughout all these companies. So if a company like, say, Alibaba and Baidu get hit, but a company like NIO and JD.com goes up, it'll kind of balance things out a little bit. So if you do like this sector and you do think there is great potential for growth, which I really do hope it is, because China has some amazing companies, I only hope the best for them. This is one particular ETF that might kind of hedge your bets a little bit. The second one I want to talk about is a company called Invesco, and that's INVESCO, Golden Dragon China ETF. And their ticker is PGJ. Prior to making this video this morning, they were trading about $47.59. Again, same thing. They their holdings are NIO, JD, Alibaba, Baidu, XPeng. XPeng is like if you're familiar with the NIO EV vehicles, XPeng is another one of those EV type vehicle companies. A lot smaller than NIO, but it's still really great company. Bilibili, if you guys know Bilibili, this particular ETF does hold a Bilibili in there. And for the price, I mean, it's only $47.59 US. So if you do have strong conviction in China, but you're not exactly sure which of these companies to invest in, these are two ETFs that might help cover your bet a little bit. So do I think that you should completely take all your money out of China, out of Chinese companies, and put it into something a little bit more safe? Again, it depends on you, the individual. It depends on your age and how long you have to invest. If you're in your 50s or 60s, I might maybe steer away from China because the recovery time might be quite extensive. But if you're in your 20s and 30s and you got another 30 or 40 years to actually invest, I say have at it. But make sure it's right for you prior to making this very, very important decision. Right now, there's a lot of political issues that are going on in China right now. You can kind of look at it as a glass half full, a glass half empty. You might be getting in at a price point that is super, super affordable, like a company, say, like Alibaba that's trading $166, and you look at a company like Amazon who's trading $3,000. Imagine if you can get into Alibaba right now when it's 160 something bucks, and 2 or 3 years down the line it's worth, or maybe 5 years down the line it's worth $3,000. So you kind of have to take the pros and the cons. You're taking a chance on these companies that China's political government might take their hands off and let these companies grow organically. I don't know how long that might take, but me personally, because I am in advanced age, I don't particularly have as much time to kind of hold out and see where they're going to head in the near future. But again, I'm not telling you by any means sell everything you have in China and only head to Europe and North America or maybe South America. Do your due diligence. See what these companies have to offer you. Again, I gave you two different ETFs that might kind of help cover your bases where you're not getting hit really bad in one particular company, which is a great thing about ETFs. It really kind of hedges your funds and it kind of protects you just in case like a company like Didi or Baidu gets hits really bad. Maybe Alibaba or Bilibili might shoot up in the coming days and really kind of balance things out for you. Like always, thanks for joining today. I hope you liked the video. If you do have any questions or comments for me, blast them down below. I really do love hearing from you guys. And if you can, like always, subscribe to the channel. It really does help a brother out. Until I see you next time, aloha.